Good morning, everyone. Today is January 19th. It is 6:22, sorry, 8:22 a.m. Uh, all right, let's take a look at what we did yesterday. Give me one second. I am I'm trying to also live stream this to Google right now. Okay, I think this is gonna work. All right, so let's start by taking a look at yesterday's trading. Actually, let's do the homework first. Let's do the homework first. I tend to get caught up in a lot of yapping during the homework, so I just want to be sure I get it done. Okay. Sorry, just need to answer someone's question, or I guess respond to someone's comment. All right, so let's take a look here. First thing we notice is yesterday's trading was inside the balance of this micro composite. We continue to stay inside this micro composite, but we are still, and we're pushing further down during yesterday's trading, testing the bottom of this micro composite, which is right here. One of the other things we haven't really done yet is taking a look at, oh, excuse me. We haven't taken a look at the shape of composites. So we're going to want to do that here. Let me show you. We'll at least start paying attention to it. The first thing we can see from yesterday's composite, I don't know how well you guys can see it. It might look a little dim there, but turn on my drawer here. The first thing we can see is that there is a really clear delineation from volume. You know, we have volume up here, we have volume down here, which kind of tapers off, and then we have that little spike down there. But this very obvious break in volume is what you would call, technically it's not even a double distribution, because you didn't really have a ton of volume here either. You know, if you remember the other day, I think it was yesterday, we were trading in the morning, and all of a sudden we had a nice push up. I think it's right when we broke the overnight high, and we had a big quick spike in volume. And I said, wow, you don't usually see that happen so quickly. This is a pretty good example of it. You know, you look at all the trading that happened up in this area here, and very little volume came in with it. So the price went up there and came away, and there wasn't much volume put up there. That's more like what you normally see when you see these types of exaggerated moves, especially at the beginning of one, like we saw that other morning. So what this really tells us, it's not very surprising that the market. This is after the fact, so I'm going to take that back for a second. But basically, what this shows us is that the market wanted to be trading right around here. I'll get an exact number for this actually here. Right around 51.20. That's yesterday's point of control. Overnight, we're now all the way back up to 51.58. So we're inside yesterday's value, which automatically makes us inside yesterday's range. So we're going to keep that in mind as we start plotting out our hypotheses. Let's take a look. Yesterday, I was talking about these. So far, you've only seen me plot these red dotted lines. Remember, the dotted lines are former VPOCs. The horizontal, the solid lines are low volume node. Red solid lines are low volume nodes of the composite. Green Solid lines are high volume nodes of the composite. Dashed lines are former swings. Doesn't matter, swing high or swing low. Orange lines, like you see here, which we're going to get rid of right now, are overnight high or low, and this is from yesterday's session, so we're going to get rid of that. And there should be one more orange line on here somewhere. Oh, there it is. Okay, we'll replot today's in just a little bit. And let me turn off this drawing here. Okay, so I have not yet started including these blue dotted lines. Now, I have seen these act and be treated well over time, just like you see yesterday. You know, I have seen them be treated as a level. I'm trying to avoid putting too many things on the chart, but I did want to show you that you know, it's not uncommon for these value area lows or value area highs to be respected as a level when price gets to it. One of the things that we can do if we want to start potentially including them, one of the things that we can do is we can scrunch it up a bit. Technical term there. You can scrunch it up a bit, and you can see if you have confluence anywhere. Now, it's going to be hard to see right now because of how tight we are, but you know, if you look back and you say, okay, let's see if I can find an area that actually has it. Oh, right there. Okay, so hang on, it's bigger again. Now, the blue dotted lines that you see on here now, these are automatically plotted by our my volume profile indicator. So here's a perfect example. So look here, you have a value area low back here. Right above it, you have a blue dotted line, another value area. I don't know if it was high or low. It doesn't matter. Another value area level, another value area level. So this whole area is very congested with them. So if you wanted to, you can carry this forward, and here's actually more of them right in that same price level. You could, if you want to, carry this forward because of how many times it was respected there. I don't think I'm going to start doing that all too much yet. Like I said, this is arbitrary, admittedly, just like pretty much anything else that comes to charting. There's very few true hard and fast numbers on a chart. You know, swing low, that's definitely one of them. You know, this was a low. That's it. That's not something people can question and say, well, really, are you sure that was a low? That's it. This was a high, though. But that's about the only things you'll see on a chart. You know, when you start talking about indicators and like even Fibonacci's, some people would draw a Fibonacci. They'll come here and they'll start it up here. They'll pull it down here. All right. Somebody else might draw a Fibonacci and say, well, I don't want to start from this high. I want to start from this most recent swing. So I'm going to put mine on from here. And I'm going to, oh, really? Get away. I'm going to put mine on from here. Oh, sorry. Hang on. To here, you know, because that's what I want. I want to start from the last swing high. And there is no right or wrong, you know, with Fibonacci's when it comes to that. That is part of the randomness to technical analysis is when you start even trend lines. If you've ever seen how people draw trend lines, when you start drawing lines on a chart, when you start drawing whether it be a Fibonacci, when you start drawing moving averages, is it going to be a 8-bar moving average, a 21-bar moving average, a 42-bar moving? You know, everyone's going to give you a reason why their moving average is right, but that's all bullshit. It's just something that they are used to. My general rule of thumb is draw things in the way that most other people draw them, because that's what makes them work. When short-term traders like us are using indicators, the idea is we're using the indicators that most other short-term traders use. And keep in mind, The same exact trader can look at a chart and see two completely different things. That's where our patience, our discipline, and our ability to understand how to react to price when it gets to a level comes in. So I'm not gonna waste. Sorry, I'm not gonna spend more time on that. That's not waste. That's something we will actually talk about. So let's first take a look. Are there any lines that we can remove from this chart? Meaning, did we go through a swing like here? We came through this swing level here, and on this swing we tested below it, closed above it, we're currently trading above it overnight. We're going to keep this swing on here. This still has the potential of acting as support next time we come to it. I'll keep the high volume nodes, low volume nodes off of the composite on here for now. That'll probably get taken off over time, but for now we'll keep it on there. We are going to stretch our micro composite to include yesterday's trading. The VPOC from this micro composite remains where it was, so we keep our dash and dotted line right here. So if you look, you see this is another dash and dotted line. All this means is we got this from a VPOC from some other micro composite. I don't care where it came from. For now, I don't care where it came from. All I know is that it's there, and that's all I really care about is that it's there. So currently we are at 51.45. We've come down 10 ticks since the last time I told you. That's nice. So a little bit of movement this morning. Let's take a look before I start drawing. Let's take a look at news for the day. And today is January 19th. 8:30. All right. So we had some news come out today at 8:30. I couldn't begin to tell you what these numbers mean, nor do I care. Next thing we have is natural gas. And remember, today we have our inventories. All right. Normally that comes out at right there. Normally that comes out on Wednesdays, but because of the holiday this week, it was pushed back to Thursday. So what that means for us is, in a lot of cases, we have a choppy open before that report comes out. That report on Wednesdays is normally 10:30. Today it's 11. So we'll see what that does. We'll see what that does for the open. Oh, wait a minute. We have one other thing we have to change. Excuse me. We need to roll over to the current CL contract. 1 second. That was close. 1 second. Let's bring this in. So we are going. Remember, with futures, you're always trading a specific strike date. This last future we were trading was based on February 2017. Now what's going to happen is, as of today, the volume is going to be switched. More people are going to be trading in March 2017. So we're going to change our charts to show us that. It's going to take a minute to load. Again, we'll get more into how to use this software as you guys get closer and closer to being ready to go live. But there's a way to set this up, and it's very easy. There's a way to set it up so that when you make a change on one of your charts, all of the charts that you want to be related to that one will change automatically. So this might take a few minutes. I'm glad I did start a little earlier than normal today, so that does give us a chance to kind of sit through this. If you guys are if watching this and you run into questions, please don't hesitate to comment. What I started doing, and I'll send out a link today to everybody. I started recording these, obviously a few days ago, and I've started to post these onto YouTube now. So if you don't have a chance to watch it in real time, that you now have a chance to watch it at a later time. And the best thing that you can do with that is to watch it at a later time and ask questions. Okay, so please don't hesitate to do that. I really want to do my best to answer your questions and make sure you guys are all getting the benefit of spending time watching this. All right. Well, here's some good news for us. We are going to be forced to redo our chart here in terms of those swings, because what happens is when you roll over, price automatically changes. There's some formula that goes into play, and it affects what the current price is, right? So remember before I was saying we were trading at 51.45. We're actually now 52.35 based on the new contracts, based on the new contracts pricing. And you can see it's, the pad, all the candles look exactly the same. It's just there's been some type of this formula weighed onto them. So what we're going to do is we're going to remove all of the lines that we drew from the chart. Remove drawing objects. You might hear my cat in the background. He's got a lot to say. Ironically, it doesn't show any drawing objects. Oh, I guess because I have them all selected. Let me see something here. I don't do that. That's interesting. I don't understand why. Okay. Now I believe we have none. Everything that's on here is automatic. So this is a naked VPOC. This is a VPOC that formed on this day, and it gets extended until it gets touched again, and it has not been touched again. So everything you see on this chart right now is automatically generated. Now it's our turn to go in and generate our own, which kind of sucks because I do lose those microcomposite VPOCs, but that's all right. We'll start with those. So here is a microcomposite. Here is the VPOC for that microcomposite. We're going to set up our drawing tools and dash and dot. Okay, so let's start by putting those on here. So there's one. Then we have another one. Here is a microcomposite VPOC with, so we're going to draw that one. Microcomposite VPOC, draw that one. Draw that one. Okay, so now let's keep scrolling back. Okay, so here's a microcomposite VPOC. We'll draw that one. And I think that's all we had for here. As I go further and further back, it looks like we can probably add more, but right now they're not needed. There was one other one, if I remember, that I did, and that was this. I believe I had, well, looking at it, it still makes sense to do it. We really balanced in here, and so I'm going to draw this one as well. Okay. That's actually a microcomposite VPOC within a microcomposite VPOC. All right. Now the next thing we're going to look for are going to be swing highs and swing lows. And we'll start right here. Let's make this. Oh, that's the wrong thing. So swing highs are going to be dashes. And it's going to be array. Let me just see what that shortcut is, F3. Okay. And we're going to take it from here. Stretch that out across. So there's one swing. Here's another swing here. So we had this swing on the chart. We have this. Let me see something here. So interestingly enough, we don't have, we had, there was a swing that we had drawn that was down here, but it doesn't correlate with this new chart. Okay, so we don't draw it. So let's get back over here for a second, and we will travel backwards in time in just a minute, to draw more and more. So here's a swing. Now this is also going to correlate with yesterday's high, but there's no reason why I can't. Let's do this. Okay, maybe not. Okay. Same thing, although this correlates with yesterday's low, that's only going to, oh, wait a minute here. Oh, we don't want that. Okay. There we go. So this actually is showing us a slightly lower. Let's roll this down to be precise. There we go. Okay, so yesterday's high, yesterday's lower, treated as swings now. You know what? We're going to, I'm going to take those off because you're going to see in a minute we're also going to plot yesterday's high and yesterday's low, and I want those to be obvious that they're a different color. So we're going to hold off on that for just for a second. We're going to go back here and put this swing on. Okay. Oh, sorry. And the reason for it, so when we had this gap down here is very different than what it was in the February contract. So that's interesting. I'm not sure, but so be it. This is what we're showing. This is what we'll use. But according to this chart, we gapped below this swing. We tested above it, came right back below it. So for now, we're going to leave this on there. Okay, we have not gotten above it and accepted above it since its creation. So one nice thing about being able to redraw this right now is I get to draw them with a starting point. The old way I used to do it, I would just click right here and it would draw a horizontal line from beginning of time to the end of time. I like this. I like being able to do it this way. Now let's scroll further back and see if there are any others that have been respected. So I'll draw them on here, and then when we move forward, we'll check them and see if they need to stay on. So that was a swing here. This is one here. Okay. Let's just make sure I'm seeing this low right. Okay. No, actually, this one here into this gap. This is something we should be aware of too. Okay. All right. Let's go back towards the end of the chart now. Fill in where we're at, and let's take a look. So we just added a couple. We just added a couple of swings here. And we can tell that where they're from because we can see they go further back in time. So we are going to disregard this one. Although technically, no, we are not. Let me show you what happened here. So we come down to this swing here. We break below it, come right back above it, test below it, come right back above it. We then gap through it, test above it, and holds. We're going to keep this one. We're going to keep this one. We're going to keep this one. Same thing holds true with this. Now again, just because it's on here when we're trading, that doesn't mean that, okay, this thing is automatically going to become an important level for us. But we don't need all three of these. We don't need all three of these. So I'm going to go with the one that is most recent. Because they are all fairly close in price. So there's no need for all three of those swings. Now, excuse me. We're going to add VPOCs. So we're going to turn this into dots. And let's start plotting a few. So here's one here. See it right here. And now what? Oh, so now, I guess I should do that. Again, I'll give these a start in time, and it'll go to infinity until we take it off. Okay, so there's one. Here's one that is naked currently. Here's one that is naked currently. So you have the dotted lines going all the way out. There's one. There's one here, but that coincides with the microcomposite VPOC or a former microcomposite VPOC, so we don't need to draw that one. Let's move up here. So here's another one. This one coincides with looks like we didn't draw this microcomposite VPOC. We didn't do that. I thought we did that, but I guess not. Okay. Let's get back to the VPOCs. And now, by doing this, what this is doing, one of the reasons I do this is because I need reasons to stay out of a trade. I have a patience problem when it comes to trading. Nothing else in my life. But when it comes to trading, I have a problem with patience. So I need reasons to stay out of a trade. Okay. So this one I'm not even going to bother drawing because it's been beat up so many times. We've gone below it, above it, below it, above it. So we're going to keep that one out. And then all these correspond to this microcomposite VPOC. They're still naked, so they're drawn by them on their own right now. So I won't bother drawing those either. But we're going to do the same thing with this as we did. We probably should go back in time further. Yeah, let's do that. So you see we have three of them kind of lining up over the course of a few ticks. We're going to, let's just take a look. Yeah, they really don't get, oh, I already have one drawn right around that price point. Okay, so really no need for that. Let's keep going further back. We have this guy. Let's draw this, and then I'll check it on the chart when we get back to the front. Okay. And you really do want to try to be as close to accurate as possible. I mean, look, if you're off a tick, no big deal. But I think it's since it is possible to be exact, I would suggest being exact. Okay. This one lines up with the microcomposite VPOC, so I'm not going to bother putting it on there as well. Let's put this one out here. Okay. All right. So, a lot of silence, but needs to be done. I had mentioned that I wanted to do this with you guys anyway at some point. So I guess no time like the present. They kind of forced us to, so that's cool. Let's go back to the end of the chart here and kind of see if there are any of these that are blatantly unnecessary. Here's one that matches up with the swing low. I am going to leave this on here, really let us see that this level has confluence. So we're really going to pay attention to this if we make our way up there today. Let me see what time it is. We got just about 5 minutes. Okay. Here's one that from the past I don't need. I didn't even draw this. Okay, this is naked from the past, and I extended it out here. Okay, so that's good. So this is a good one. This is one that just formed here. That's nice. And there's nothing else above that I drew from the past. There's this guy from right here. That's been beat up pretty good, so we're gonna get rid of that. Beat up meaning it's, price has gone through it several times. All right, let's take a look at what we are paying attention to today. So we have yesterday's volume profile right here. Okay, we see high of day goes way up here. I might have to change these colors. I don't know if you guys are able to see this very well, but we can see in the day the high of day is here, the high of the profile is up here. Truth be told, I can't really see it all that well. But what matters to me most is this yellow, the high of day and low of day I can see right there. Speaking of high and low, let's insert our overnight high and low real quick. And that's going to be this orange, solid horizontal. Overnight low. Overnight high matches right up with the swing point. So not the most surprising thing in the world. You see these numbers act this way often. All right, let's get in here. So, sorry, I don't know why this tends to happen. The first time I draw it in, I think it's because I had it. I think it's because I had my drawing tools active on the other chart. All right, now time for homework. Let's try to do it quickly. Get my little drawing tool ready here. So, because of where we're trading, 52.43, we are trading right at the upper end of yesterday's value. So what we're going to be watching for is, are we going to be able to hold here and then make our push down below, use this as resistance, and make a push towards yesterday's VPOC? Okay, that's going to be the first thing we look for. When we get to this VPOC, I would expect some choppiness, and ultimately, I would expect us to go give a test of overnight low. This is expectation number one. Expectation number two, open choppy. This gets treated as resistance. We fail, get to VPOC, chop around, get support, come test overnight high VPOC. If that holds, we're seeing if we can't get to towards yesterday's high. Nice range yesterday, real nice range yesterday. Okay, that's going to be number two. So far, both of those really are focusing on this value area and here. Number three, open, test overnight high, fail, come back, chop here, and ultimately make a push down towards yesterday's VPOC and maybe test the overnight low. That's going to be hypothesis number three. And third one, Third one is going to be open drive towards the VPOC. VPOC holds, testing yesterday's value area, and staying inside this range, at least for our purposes, prior to the news. I really hope that's not the one. That would make for awfully tight trading, but it's I could have none of them right, and it really doesn't matter. But one thing we are going to take from it, and the reason it doesn't matter is we know what levels to watch. We know how to react. I shouldn't say we know. We're learning what levels to watch. We're learning how to react to those levels when we get to them. But I am going to draw in yesterday's value area high, because we don't have anything around there to use as a level. So I'm just going to put it in here. Just going to put it right here. Okay, here it is on this chart here, showing up there. I want to make this even a little more obvious. Not sure how I could do that. There we go. So, and the reason I have this here, like I said, is because on this chart is showing trading overnight. We have yesterday, once I stretch this out, this is the profile from yesterday's trading during the day. And when you look at these indicators, yesterday's high, yesterday's low, yesterday's close, it's talking about the regular trading hours. But I don't have anything on here that shows me yesterday's value area. I don't have anything on here that shows me yesterday's value area. So I have to draw this on there by myself. What time we have? 20 seconds to the open. I don't know that phone call could have come at a worse time, but that's okay. Okay, here we go. Oh, you know what? I'm actually also going to draw in yesterday's VPOC since we don't have that. There it is. Nice. Okay. So open push didn't quite get to yesterday's VPOC. Kind of right in the middle of the overnight trading. Here's the VPOC from overnight trading. Let's see if this yellow box can go away. Okay. Here's the VPOC from overnight trading. You can see it here in this profile. Nothing really glaring in the way of the first potential setup here. You just right now, just kind of got to hang out and see what comes. Looks like we might be in for some chop here, which for us is, just time to sit on our hands if that's what ultimately develops. Excuse me. Sometimes my chart, I'm sometimes my mouse rolls over something on the chart that makes it kind of go to another time, or I'm not sure how it happens, but it's not intentional. And keep in mind, today is inventories, so we do expect usually some calm trading before then. None of this is hard and fast, but it is certainly the percentages. Excuse me, if I remember right, the last inventory day we had a push up, and then we balanced, and it was in that balance that we were able to take a couple of trades, I think, or I think we did okay with it. I think we had one or two winning trades. I honestly don't remember it for sure. I do remember the price action. I don't remember the trades. Okay, testing the high of day, or I'm sorry, getting close to testing the high of day. Pulled back a few ticks here. And this is not one of those situations where we have a consolidation and we say, okay, we're looking for a breakout pullback long or breakout pullback short. We don't really have a trend to go off of. I mean, I can scrunch this up, again, technical term, and bring in yesterday's trading and say, okay, from the most recent point of yesterday's trading, we have, let me get my drawing tool here. Oh, sorry. From the most recent point in yesterday's trading, I don't know why this is not working. Oh, so there we go. This will work. We can say we're in an uptrend and this is a pullback, so maybe we have consolidation trapped to the downside, give us a chance to go long, or consolidation, breakout, pullback, long. None of those right now are of any interest to me. That's not to say that they won't work. I just don't have enough on here to tell me one way or another. Again, testing the opening. Excuse me, the high of day. We do have some divergence from the high of day, from the opening to now. Could look at that as a potential trade setup, as a potential short opportunity here, being willing to scale in. You'd have to at least scale into the value area high of yesterday if you wanted to do that. Not for me. Not one I'm all that crazy about yet. This divergence doesn't come from, normally when you have divergence, what we're looking for is something like this. A move had come up, then the move makes its way down, and then the move comes up again, and then we look for divergence. This is doing this, and this is way steeper than that. That's kind of what we look for. This divergence, these charts are going crazy. This divergence was off of, this is not a move up at the open. This is just the opening price. So I can't really count that as divergence. Or I choose not to count that as divergence. All right, so we're coming up testing yesterday's value area high. We're also testing overnight VPOC. Remember, overnight high, overnight low, and overnight VPOC are the levels from the overnight that matter to us most. If we see a real obvious opportunity from the volume profile, like a double distribution where there's a lot of volume in one spot, a lot of volume in another spot, and then just a real, why in the good hell? Oh, I know why. If we saw like a real obvious double distribution and a low volume node that separated those two distributions, we might pay attention to that too. But at this point, what we're watching for is right now a pullback down towards middle of the day VWAP, bottom of this, this micro double bottom here. We're watching for a pullback here to see if we can't maybe get into a long with an effort to push push above the current high of day and towards this value area low, value area high from yesterday. While this is going slow, I'm going to jump over to my other screen to try to fix something. Okay, didn't give us a pullback yet. I'm going to see if I can find another app to highlight the mouse. I'd like one that I can draw without it dragging my charts. See, right, like I know with TeamViewer, see if I pull up TeamViewer drawing tool, I can draw stuff and it doesn't move my chart around. Now on this tool I have now to highlight the mouse so you guys can see me better, when I draw stuff, it moves the mouse. Oh, it didn't there. That's kind of cool. Oh, well, it has been, okay. But if it won't, then that's all the better. There you go. So, oh, look at this pullback here. We're right near where we want to start looking at getting into a position. Now, remember the other day I overreacted to a move like this. I'm being a little hesitant on just pulling the trigger. I really would like to see some other type of setup. To tell you the truth, I wouldn't mind seeing more of a push down first. Testing the mid, testing the VWAP. First real test of the day this early on. This one here really doesn't matter. We never really we did pull away from it here, but it was instant. At the open. I actually like this here as a first part of the entry. We'll move this away. I would be looking to scale in a little late on this trade. I probably should have been in this a little sooner. I mean, yeah, at a slightly better price. I might have chased this one by a tick or two, but I'd be willing to scale in to here and even further. Probably not. I don't think I want to be scaling in below this swing low here. I'd really like to see that hold. So what we're going to do, the low of that swing is 27. I'm going to want to put my stop in at about 24. So that's 5 ticks. Yeah, what we'll do is we're going to add a second one here. If we scale in down here, we're going to want to be in our full position. And at that point, so right now I'm already going to put my stop at 24. Okay. Profit target from where we are in is up here at 44. This is not a good trade. Our profit, well, I shouldn't say that. I mean, we are low. Well, okay. So I'm going to be very quick. The reason why I'm saying this is not a good trade is our range is awfully tight here. In order for this trade to work out, we need to break through the high a day. And we took this trade because right now everything is showing uptrend: low, high, higher low, higher high, higher low, hold of VWAP, hold of middle of the day. So that's the reasoning for this trade. The reason why this is a bad trade is I didn't take the time to look at, okay, if I get in here, where is my profit target? I really would have liked to have had a pullback far enough down, like we just saw here, a pullback far enough down that our first exit price can be below the current high of day, and our average price has come down, but it's still above the current high of day. So we're going to watch this pretty closely, and we're gonna see. We might scratch this trade earlier than that 10-tick profit target. It might be scratched for us if it continues to push down. Which certainly right now seems to be a strong possibility. No, well, there's actually a fair amount of size on the offer at 52.30, 100 contracts there. They just got eaten up. Would really like to see this at least come and test the high of this channel. I don't believe that if we get up there, we're going to have divergence. I think the BBs would flatten out to where there's no real divergence, but there's no way of knowing that for sure until we make that move, because we don't know how that move is going to come. We also want to pay very close attention to time today, although we won't be around for that 11 o'clock report. But in the event you are trading near a major news announcement, and nothing for oil is more major than the inventories, you want to be out of your trade a good few minutes before that report comes out, at least 5 minutes before that report comes out. So here what we're hoping for is that we get back above this VWAP, back above this middle of the day, and start holding there so that it would look like that those two are going to actually hold as support. Because again, remember, those were some of the reasons for our trade. I talked about yesterday, and I'm probably going to start talking about it every day, that we get into trades for reasons, right? And as those reasons disappear, we have less and less reason to be in a trade. So there's nothing wrong with, I don't agree with, I'm sure there are some people, I know there are some people that say you get into a trade, you're getting into this trade for X amount of profit or X amount of loss. I don't agree with that. You're getting into a trade for reasons, and you do have profit targets and you do have stop losses. That's part of trading. But things can happen within a trade that changes your mind, that changes whether or not you want to be in a trade or you don't. There's 150 contracts at 34. Not much at 33 at this point. I'm really interested to see if we can get 33 to go bid. And now what happens at 34? They're going to start getting rid of some of those. They're not really trading 34. They're just kind of sitting there. Come on. Somebody do some buying here. Okay, now they just took 50 of them. So that's a nice little chunk. Go away. So I don't have what I'm looking at. I don't have on the screen right now. I'm not looking to overwhelm you guys with information you really don't need. And honestly, those numbers don't mean much. There is a software out there, I think I mentioned it the other day, called Auction Vista, and another one is S5 Bookmap. Those two really show depth of market and order flow really, really well. I'm probably going to add those to my trading tools. And when I do, of course, I'll make sure I learn it well enough to be able to teach you guys. That's probably something we're going to put on the screen at some point. Right now, I'm more interested in timing entries and exits off of our price levels, off of price action, and we'll add that tool once we have that. All right, so here's we're bid 34 now. So now let's see if they'll trade 35. Are they going to start buying at 35? I'll tell you what I'm going to do here. I'm going to take one. Hopefully, I can get it. I don't like that turn right there. I'm going to try to take one off at 36, and I'm getting awfully close to just closing this trade, which looks like I might have missed my chance to do that. Meaning, missed my chance to do that at a break even. Yeah, little late for on that particular push. we need to see if we can get one more push. But right now, not the way we want this one to go. Super tight range. Obviously, we can see here on this channel where in probably less than a 10 tick or just about a 10 tick range from low to high. Come on, get above that. I don't like how this VWAP is starting to hold here, so I think we're gonna close this trade right now. All right, we're out flat. Don't care where it goes at this point, but look what's happening here. All the trading is starting to take place below the VWAP, below the middle of the day. Remember, one of our reasons for being in this trade, we had a pullback below the VWAP. We had come up. When I entered the trade, we had pulled to the VWAP, and we were looking to see if it would hold as support. You started getting a bunch of candles trading and closing below it. So that reasoning has gone away. For me, this is now a 50-50 trade. Not enough reason to want to stay in it. No harm, no foul. I don't care at this point if it goes up, because if I wasn't in a trade right now, and I'm not, I don't see anything here to tell me to be in a trade. So scratch that one. Of course now it is gonna make its push. But like I said, in all honesty, even seeing here, this swing low, I guess that holding, I guess that I could have been a little more patient there. Could have been a little more patient. But that's a lot of touching. Basically these levels are like rubber bands. The more often you push them, the weaker they get. We do have divergence on pretty much all the charts. We should be looking to swing this into a short. That's actually what we should have been doing right here. Trying to get short below the open of the day, below the high of day. And I will tell you what, that's exactly what we're going to start doing right now. There's one. We're going to take a short here. We're going to look to scale in right around high of day. We'll come in a tick below that. Again, we're messing around on an awfully tight range here. By me having my chart stretched out, all these long handles are deceiving. They really are. These candles are seven ticks big, which is not much. But so it is a little bit deceiving to my eye when I see that. I really should have been calculating this better. Mistake number 2 for Eddie today. Look at our entry, 35. Look at where our profit target will be at 10 ticks, 25. So not below the low of day, but certainly below this swing here. So we're gonna put an order in here. We're gonna put our limit order in here to buy our profit target, and I do like that we broke it here. This at this point, this turned into a trap outside the low, came right back up to the top side of the channel. but this is still above the low of day. Okay. I'm going to be paying very close attention. Oh, never mind. Nothing to pay attention to. Shoot. Okay. So took a little stop there. We do have divergence. We have divergence right up at this. Oh shit! I canceled the wrong stop order. The stop order is all right. Okay. We should still be in this trade. We scaled in. The stop's supposed to be above this value area high here from. Oh, awfully sloppy. Awfully sloppy. In fact, I can probably get back in this trade right now for a better price than I was at. So that's what I'm going to do. Yeah. I'm going to take 2 here, and now we're going to put our stop. This is what, 14. Okay. All right, so there's our one. Our profit target now is in a really good spot, meaning if price comes in our favor, we don't even have to test the bottom of the channel, and we have the potential of getting out of one of our contracts. Much better placement for our profit target. So in this case, my fumbling around didn't really hurt me much. I got stopped out. I actually think I might have gotten back in at a better, close to the same price, scaled in the way I would have been in my 2 contracts. So it didn't really hurt. Kind of got, now this might go against me. You know, this trade might not work, but kind of got lucky that I was able to get back into it at the same price. So got a little bit aggressive early today, not recognizing how tight that range is. You know, to me, and to all of us, that's a beginner's mistake, and that's one that we need to be fully aware of. You know, where is profit target going to be if we get into a trade? And you know, within this channel, there just wasn't enough room between the swing highs and swing lows. Now I closed this one out a little early. That's okay. You know, it's a break even. You can't go broke taking a loss. You know, with all these lows holding, but again, remember the reasoning for our trade there. Right now, VWAP is irrelevant to us. I mean, we've gone above and below VWAP in the middle of the day. You know, so many times it's completely irrelevant until proven otherwise. And you can see we have divergence. We have divergence so far. Not on the 610. We've lost our divergence, but we had it when we got into this trade. We lost it as the price broke, which is why I'm not adding a third contract. But we do have divergence on the other 2. We do still see them kind of pointing down. You know, you can draw trend lines. You could draw trend lines on these too. You know, like you have this certainly coming into a downtrend. This certainly coming into a downtrend. You know, so we'll hopefully those continue in that direction. And if that's the case, that would mean that price has gone down in order to make that happen. Yesterday's value area high has so far held its resistance. So one of my profit targets on this trade is going to be my 10 ticks. But remember, what was the other thing that we were looking at? If value area high holds as resistance, what was the other price level we were watching for? And that's yesterday's VPOC. So my next profit target, I'll come in quite a bit above it, you know, just so I have room. But my next profit target would be, let's do it here. Now, mind you, we have a long way to go to get there. The reason I'm not scaling into a third contract, the reason I'm staying small with 2 contracts here, is because, sorry, kind of funny, is because we've lost our divergence. I'm not looking to add in here. My stop is tight. This is a 5-tick stop, which for us is a very, very tight stop loss, especially when we only have 2 contracts. So we have a nice tight stop here. We could be wrong on this trade. I'd rather not be, but we could be wrong on this trade, and it wouldn't cost us all that much. Once we get above yesterday's value area high, you don't really have much until the overnight low. All right, so I don't have enough. Let me see. I'm trying to remember how to turn off my drawing tool. There's a hotkey for it, but there's too much room in here for me to scale in. Okay, too much between here and here. So we have a tight stop here. If we break through this, which we just did, if we break through this, now what we're going to start watching for are pullback longs. In fact, right now, that's exactly what we're watching for. Breakout. We're going to see if we can't get a pullback to give us an opportunity to go long. We'd even try to use this as a support level, because right now the next level that seems obvious to us that we're going to test is the overnight high. And hopefully we get a chance to get into a trade on its way up there. No divergence. You know, we're pushing up now. We're pushing up now on all of the BBs beneath us. High of day is 49. Certainly can't be into a trade lower than 30. That's not true. We expect to break high at this next push up if we get a next push up. So we are going to, I'm going to put one there. I'm going to put one there. Actually going to move that up just a little. But we may not get, we may or may not get a pullback here. Let's bring this down just a little. And right now, what we're looking for, we had a nice little push up here, little consolidation, breakout, looking for a pullback with an opportunity to go long. Let's cancel this order here. We do have a bit of divergence from this swing high to here. It's an overnight price move, but divergence nonetheless. So I'm actually going to pull this for a second. We might still get into a trade here, but it would be with a market order. You know, if we see price action set up where we get a pullback down into this consolidation, we still might try to get into a trade here. But I kind of want to see how it sets up there. No real pullback to speak of there. Retesting the high of day, no divergence. Let's see if any size. We have a pretty decent amount of size all above us. So now a whole chunk came. I know, might be disappeared. 5250. Oh, never mind. Everything that's happening above us is just people putting orders in, pulling orders out. Not really doing much of anything. So let's see here. Well, let's go back for a minute. Let's talk about some of the trades. Couple of mistakes on my part today, getting into a trade where the profit target wasn't, where we didn't have enough room to get to our profit target. We scratched that trade out at a break even, so no harm, no foul. But still something we should have been aware of before we got into that trade. So we'll give that trade a D, since it didn't cost us money. There's another push, still trying to push towards that overnight high. It turns out that trade that we got into here at the bottom of this channel is now looking like an absolute winner, and we just needed to be a little bit more patient. So from that perspective, nice timing on the entry, but we had this swing high up here that kind of got in the way of the profit target. Didn't have enough room to mess around. The fact that it ended up breaking that channel is nice. Maybe could have been more patient. Maybe could have waited for it to make a push and move or stop the break even, but we didn't. That's what happened. Next trade we took up here off of looking for resistance from the value area high from the day before. Got up to it, scaled into it, fumbled around with my stop. Very, very, very sloppy. The order entries created two stops. Let's watch for a pullback here. Hang on. This is actually where we're kind of looking to see if we can't get back into a position. It just came and touched. Would have had to have had our order out there Would have had to have had our order out there waiting, which we really should have. Why should we have? Because we've lost our divergence from here to here. In my review of the trades earlier, I took my eye off of what was happening here. That's okay. So let's go back to what I was saying. Um, took a couple of shorts, scaled two contracts, fumbled around with the stop loss. As my orders get filled, as my entry orders get filled, stop losses are placed automatically, and NinjaTrader's killing me with how they place it. But what ended up happening was there were two stop orders out here, one further from the other, and I was fumbling around to kind of move them in the right place, and I just didn't place them properly. So even if I did, I would have been stopped out of that trade, but it would have saved me two contracts worth of commissions because I ended up getting back into that trade at the same price. But it would have been nice to not have fumbled around and look like a moron. So we did have a little breakout trap here. So here, you look at this as two different potential trades: break out of this consolidation with a pullback as an entry, or trap out of this consolidation with the idea that it's going to continue to push and test the other side of this range. And we're looking to see if it's going to make its way all the way up to the overnight high. So right now we have leveling off on the 610 for the BBs, 987, 1597, both still pointing upwards. Nothing really to speak of there. We would not. Let's say we get a turnaround here. If we do have a pullback and we start seeing divergence setting up on the BBs, in order to try to go short here, we would have to scale from here all the way up to here, which is 10 ticks. It's certainly a very scalable price level, and our stop would need to be above the overnight high. So we wouldn't be in the position like we were down here, where we were getting into more contracts closer to this level and putting our stop right here. We weren't looking to get way above that level. We weren't looking to scale, because look at how much room there is between these two. So that's one of the things we look at for, should we scale or should we not? Hang on here. All right, testing high day again. Let's get these BBs in the right order. Okay. Tested high day again. We're not taking a short up here yet. No divergence. The fact that high of day held is nice, but that's not, not the good reason for a short. We really did nail the entry here. We really did. Just kind of had to be more patient. Had to kind of be willing to take that risk of, we got in. We had a decent price. I think we were in at the, I don't remember it. So by the time I remember, we were in at 34. So not a great entry. Nah, it's not a great. Oh, you know what? We scaled in though. We scaled. We also took one. Yeah, we took one. Oh, we took 29 too. Yeah, that's good stuff right there. We took two at 29. Oh yeah, that's a real good entry. Real good entry. Yeah. Okay, that's cool. Cool beans. Kind of wussed out there. It happens. So I have Billy. If you're asking a question, I can't hear you. No, no, I prefer you ask it. Sure. No, absolutely not. If you have a question, if you know, if let's say you ask a question and I'm in the middle of like looking for a trade, I might tell you, you know what, jot it down and we'll get to it. But no, what I say is when I stop recording, I'll tell people if they want to ask a question, either text or email. Hang on, here comes another pullback here. So again, this might be setting up for another pullback quick. This might be setting up for another decent trade opportunity here. Still no real divergence at the high of day. We're expecting a push to the overnight high. I mean, that's really the next logical level. We've certainly held above this value area high from yesterday, one of the levels that we looked at it on homework. That's two now that if we had the trade out, we would be in our first contract, or depending on how we decided we were going to scale in or not scale in here, we'd certainly be in our first contract. But I don't know if we would have been. Let's see, we've gotten out of our trade yet. So this is what, 41. So our entry's 43. Did we get to 53? We may or may not have gotten out of our trade. We got up as high as 53, but that's not to say that we would have been filled on our trade. For example, if I was in this trade at 43 and it got to 53, like it's done in the last few days, where it gets to my profit target and not fill me, I would probably lose my effing mind. I'd rather a trade just go completely against me than some of that nonsense. Do I have any orders sitting out here? No, okay, just that one. Now let's go back to our hypotheses for the day. So yes, we've broken above value area high. We're starting to put volume in here. We're starting to consolidate. We really are looking for, these traps have been nice. These have been some decent trade entry opportunities. Really should have taken one of those. Even though we're not out of our trade yet, still that's a, because what happens is we have a relatively nice organized move here, move, level off, move. We've pulled back from that move, and now we're consolidating towards the high of day. This looks like where we would get a pullback like we have, and then make another push. Because remember, we still believe that overnight high, which if you remember, coincides with the previous swing. We still believe that's a magnet. That's something we're going to want to try to test. Now, we're not just going to take a trade because we believe that. We want the proper setup, which we have. We have had it here. We did get some decent entry opportunity, but we're drastically slowing down now, and not surprisingly, again, today is the reports, the day of the reports. Things tend to go pretty slowly. Let's just take a quick glance over at the ES, see what it's doing. We don't have levels on here. I mean, I see a few of these drawn out here. I honestly, hang on, coming back here. Just came back up towards the high day. That was a quick push there. Okay, missed this one. This is a very seeable trade. This is just one that I missed. Again, not the best trading demonstration today, but that's why we trade on simulation until we're comfortable. Now between these two, we have a good 20 tick range. So if we were going to start consolidating, if we were going to start ranging between these two, we'd have plenty of trading opportunities. And we missed one here. We definitely missed one here. Actually missed two here, really. Again, if you had your order in at 43, definitely would have gotten one here. I don't know that you would have gotten one here if you weren't already filled. So same basic idea now. Looking for a pullback. It's going to be a little harder to find an entry here because we don't just want to get. We probably have to start looking to enter somewhere near the bottom of this here. But I'd really like to be closer down to here. So first things first, let's get an order out here. I don't know how many times I could say we should probably be looking to get in and not have an order pending. So we'll start with that. We're also going to see potentially getting into a trade earlier. Like that's not one. That's not that's not one I would have not even not because I just didn't react. That's not enough of a pullback for to my mind. 13. So it's 56. That's 10. That's 10 tick pullback. And is that I had I was looking into something a while ago. I was talking about harmonic variance the other day and how the from the information I've seen, and it's not information that I've put together, but from the information I've seen, it's about 15 ticks in crude oil, which means basically the rotations are about 15 ticks big, give or take. And like most 70% of them are within one standard deviation away. I don't remember what those numbers are. So we're getting up to this overnight high here. We missed this one. We actually had really well planned entries today. Did not execute on them. Did get really good entries down here. Messed up closing the trade out early. Kind of got afraid of the risk, which we did. We did have some reasoning. We did have some reasons to close it. And like I said, with the VWAP, um, with the VWAP being broken and with trading below it, we did have some reasons to start looking to close that trade, no doubt. But um, our entry was really good. We also our short entry here obviously was wrong, but that's okay. That's a trade that did actually look like it was going to set up. You can see we come up, we test, we form a nice little bearish candle here. We scaled in properly. All that I was completely fine with. Um, Seeing if this would hold as resistance, it certainly didn't. And in order for it not to, you could see it was a really strong push through it. We should have had our trade out here for entry at 43. Probably we would be in at one contract here. I don't think we would have taken more at this initial price point. I think we would have tried to scale in maybe more towards middle of the day, not specifically because of middle of the day, but it also coincides with this little consolidation here. And we probably would have been looking for a third scale in down towards the opening of the day. And here comes an hey, where'd my trade go? So here once again we've had a pretty significant pullback here, and I'm getting pretty tired of not being in this trade. What was our high? 57. We just had another 10 tick pullback. That's about all we've been getting. You've heard me say before, these kind of stair stepping are tough. This one is not as tough. This one did set up a trade opportunity that I just missed. Um, this one did set up a trade opportunity I missed, but it really only set up the one. These 10 tick pullback, what I started saying before about the crude oil. So 15 tick harmonic variation. What I've been looking at is in situations like this, when we do start kind of drifting, what's the general pullback before we start heading back in the original direction? And that's kind of what that 15 tick harmonic variation is referring to. But when I look at this and I see, okay, 57, we just pulled down to 45. There's 46. There's 11 ticks. This one from 53, we pulled down to 43. I remember that one. There's the 10 ticks. I've been starting to watch this with the idea of potentially looking to add contracts in trades based on that. So if we're long here, or even if we're flat here, and we get a move up, swing high on this move is 52, low 42. There's your 10 tick pullback. Look to get into a trade on that pullback specifically because of the pullback. Where we believe we're going to continue to be heading upwards. And, we're looking for 10 tick pullbacks as opportunities to enter into a trade. So haven't yet in any way incorporated that. There's enough stuff for us to pay attention to. You could see on a day like today, you could see where it's easy to make mistakes. It's easy to fumble around with entries. It doesn't usually happen, but I'm actually glad that you're getting to see it, because I can assure you these will all happen to you, and for you to be able to for you to be able to see how they're dealt with, how they're handled. In some cases, they're just handled by you losing money. It's a mistake you make, and nothing you could really do about it, other than do it better next time. One of the other reasons we didn't scale in further on this trade, if you remember, is because we lost our divergence. Right. So this trade, had this trade ever really started going in our favor, we would have been starting to watch to close this one at break even or a little above break even as well, or closer to break even, because we've lost our reasons. Right. So we probably would have started watching out for that, or at least look. Most likely that's that. But it never came in our favor enough. We got into this trade and pulled a little bit, and then it just made that really sharp move through the overnight high. Generally, a move like this through a level tends to show that level is now switching, in this case from resistance to support. Generally, when you break through these levels strong like this, that's a sign that it took a fair amount of momentum, took a fair amount of strength to get through it, and that it's going to hold on a retest, which is why we should have had our order in here earlier. Putting in a fair amount of volume up here. Nice taper here. Potentially starting to set up divergence on the 610, but only on the 610. Yeah. Well, we try to take trades going into resistance. We try to go short as we're coming up to resistance. If we have like another indicator being divergence, we're trying to go short as we come up towards resistance. So, we try to get our first contract on that way if we have something else telling us like that divergence. Hang on one second. Current high is 57. We've come down here. Okay, so there's our 10 tick, 11 tick. So you do try, but there has to be more than just the fact that you're getting to a price. See here, we break above this, our pullback. At this point, we've lost our divergence. We have no divergence. So now we're looking to stay long. So we break above this resistance. It turns into, we're expecting it to turn into support. So we look to go for long on a pullback here. So this is really starting to tighten up here. For us to have any reasonable trading opportunity, we need to see ranges of 15 ticks or so, because you're not going to catch the absolute top. You're not going to catch the absolute bottom. I'm coming up just above this low volume node here. Okay, so we're in for one. And we are going to be willing to scale in here. Remember, at this point, we don't really have any reason to believe that VWAP is going to hold. So what we're going to do is we're going to be looking for, let's do one here. And let's do one here. Let's take a look here for a second. I'll tell you what, we're actually going to, yeah, I really do still like this. Yeah, I am going to look to scale into another one here. I might actually look to scale into two more here. I'm just trying to see where that third scale would be. If I move it all the way down to 35, at that point I kind of fear as if we're now, it's still, I have nothing below us here to use as a protective stop area. So what I'm gonna do, I really want to use this as my stop. I want my 34 or so. I want this to be my stop price. So what we're gonna look to do is we're gonna look to see if we can't get 40 and 37. And because we are in a tighter range, my scale-ins and my stop losses are in a tighter range. But let's see if we can't, certainly right now what I'd love to see happen is for this value area high to hold. I just realized the time is, I still got all the time. For this value area high to hold, love to see that hold, make its push up. We do have divergence, potential divergence on the 610, potential divergence on the 987, but we do have room from here to the high a day to be getting out of our trade at our 10-day profit target. So you can see we tested value area high and it held. Just tested value area high in VWAP, and they, for now, have held. This is a very microscopic reaction to it. And the question is, are we late to the party? Has the push up ended? We still, as long as this value area high holds as support, we're okay. We're okay with our trade. I actually do want to be in this second contract here. Let's see. I just have the order selected in case I want to move it up to try to get filled. I don't want to chase it all that much. That wouldn't be much of a scale in to get one or two ticks. But sometimes, just so you know, sometimes that is the scale in. Sometimes you get into a trade here. Now you start seeing another setup, and even though it's only adding, you're adding another contract. Sometimes you're even adding a contract when you're in the money, if the trade sets itself up that way. But so far, this is holding nicely. For those looking at second entries, here's your high, your count is at 0. So far, you are still at 0. You get to have your first entry on a long. So a lot of indecisiveness here, which you can just tell by the fact that it's standing still. And you can see we're not really putting a lot of volume in at this 41. So value area high and VWAP still holding as support for now. Let's see how this candle closes. Okay. Let's see if we can't get a push above this previous candle. Really, really stuck in quicksand here. And remember, our reasons for this trade is that we are, as we've been pushing up, we did not have any divergence. We've gotten a pullback to a level that we are paying attention to, this value area high. So we've gotten what I believe is actually a decent entry here. Um, we have now formed what I believe would be divergence as we get back up towards the high of day, but we do have a little bit of room for our first profit target before getting there. Now, depending on how we get there, that divergence can disappear. So, but my expectation is if as we move back up here, we'll level off in the BBs, but I don't think we're going to be seeing that. I don't think we're going to lose our divergence completely. Really pretty much doing nothing right now. This is kind of where you can drive yourself crazy a little bit. If we look over real quick at the ES, let's see here. We have a high 2069.50, low 26. So really, also really tight range. 4 points here. 2269. Yep, 4 point range. So 16 ticks on the ES. ES does tend to have a much tighter range than oil, and I really haven't spent that much time watching the ES to be able to offer any type of opinion on it. As far as levels go, you bring in the chart of the ES, your homework chart, those levels are going to function the same exact way. Those levels are going to function the same exact way on any chart you look at. Those levels are just going to be closer together or further apart on different charts because of how volatile that particular trading instrument is. But those concepts, swing high, swing low, the volume profile, the VPOCs, the value areas, microcomposite VPOCs, overnight high, overnight low, all those concepts stay the same. Now with bonds, if you're going to start looking at that, I believe with bonds it's a little different because it's 24 hours. You don't break up the session like we do here with oil and with the S&P, the regular trading hours of the overnight. With bonds, there's your first entry right there, by the way, for the second entry people. With bonds, it's a 24-hour thing. So I don't know what you would use, if anything, to call something an overnight high or an overnight low. And again, it's just because I don't know enough about the trading sessions, but the concepts will stay exactly the same. If you use the entire day's worth of information as one chunk, then so be it. You'd have, instead of having two volume profiles for every day like we have for the overnight session and the regular trading session, you would have one volume profile. But still, the concepts of the volume profile stay exactly the same. At this point, I actually don't want to get scaled in. The way this held down here, I'd really rather see this now. So we have a high, a low, currently a lower high. I'd really rather just see this push, which obviously has not happened here yet. Hmm. I'm moving up one because I want it to be above this low volume node. Sometimes when you see this drop off in volume like this, this last area of volume it could act as support. So okay, so we got into our trade. Couldn't we'd be in our trade no matter what now. Okay. And what's our current average price? 41. Okay, so now what we need to see is we're now testing below value area high, but we'd like to see us come fairly quickly back to trade above it. That would be a very nice sign. Certainly that is not what we're seeing. Okay, so came in a little late to the party here. We got into the trade. We got into the trade around here. Oh, look at this push! Wow. Oh shit. Yeah. Let's see. No, I don't see any news for 10 o'clock. That's an interesting. Something. I have to believe something just was said by someone. Not that it would matter. That was not a predetermined time for something. So, a little bit of randomness here. But so I tell you, I really don't hate this trade. The part I hate about it is that we missed the real entry here on this initial pullback. We came up, tested the high a day, really started consolidating. Um, I really don't mind this entry here. I have to tell you, I really don't. Even though it went against us, I don't mind that entry. That's a reasonable entry for for good reasons. We didn't expect VWAP. We weren't using VWAP as one of those reasons. We said that earlier, that it's for now disregarded. We weren't using mid as one of those reasons. It was really about the fact that we were making our way up, broke above what we thought was going to be resistance and turn into support, which it did. It did one time here. It did another time here. It did another time here. It just didn't give us enough of a move to benefit off of it. And then it broke. So now at this point, you're actually back to watching. We're still back to watching the hypothesis of um, if we can't get above here and hold above here, we're watching the next level. Excuse me, the next level of Tesla down here. But at this point, I do need to go. Not a very good trading day today. More so, my problem with today's trading was the fumbling around, not so much the actual entries. More so with the fumbling around. And I will do a review of it tomorrow. If you guys have any questions, so I started a YouTube channel. If you just go and do a search for my name, you'll find my channel. The best thing I can suggest to you is just subscribe to that channel, so that whenever I put up the video, you'll know it's there. You'll automatically, I don't know, I think you get an email or you get some type of alert. So if you have any questions, don't be afraid. Please email me or text me, and I will see you guys tomorrow. You too, my man. Hello. Good morning. Yes. Perfect. Who is the driver? Okay, cool beans. All right, great. Eddie. Yeah, there's some phone numbers on the order for if you can call either one of them, please. In fact, if it's okay with you, could you call them about this now? Because they're going to be the ones receiving the order. Oh, that'll be great. Okay, thank you so much. Okay, bye-bye now. Right. One, you got a trade here. Two, trade here. You come to the trade here. You take 43 here. This starts there. Yeah, but let's just say you know, you're wrong.